In early March, many people asked me if they should buy stocks now when it had dipped. So let's see what I said on March 4.
Looking to enter a tech niche, a dip is definitely an opportunity. But is this a dip? Let's find out.
2010 to 2020. And what has changed now? Nothing. Nothing has changed now. We're still in the same channel. If we zoom out, you cannot even see what has moved, what has happened here. So in conclusion, from a fundamental perspective, of course the risk has increased. Of course there will be a business impact if people don't go to work, if people stop traveling, factories aren't delivering on time, people are staying at home scared instead of driving bold business execution. And I'll make sure that I have plenty of cash ready to buy should this become the start of a much deeper dip, like this one here in 2007 to 2009, or the big one here, year 2000 to 2002. So, as I said then, it wasn't really a dip yet. That's only 3 weeks ago. It feels like a lifetime ago, doesn't it? But since then, Nasdaq continued down another 24%. So what about now? Dow Jones has bounced up 14% from the bottom. Is now the time? First of all, I want to take a very humble approach on this. A lot of people are very confident here and think they can predict the future. I can't predict the future. Nothing like this has ever happened in our lifetimes, and I think it's arrogant and stupid to believe that you can. But there are a few things that we do know. There are some facts. The first and the most obvious is of course the cases. So if you look at total number of cases based on this source, of course this looks very bad. This is on linear scale. Logarithmic scale means that if it's increasing by say 30% every day in an exponential pattern, this line would be straight. And I mean, even on a logarithmic scale, the line is bending upwards. Of course, this partly reflects the fact that more tests are being made, but even if you look at the death statistics, it unfortunately looks the same way. I lived 10 years in Asia and I have the greatest respect for the people there. Southeast Asia practically stopped the transmission of the virus, so it can be done. We in the West, on the other hand, we did not, neither in Europe nor in America, which I found both surprising and disappointing. I did not see that coming, especially after Asia had already shown how to do it. This is not good. So looking at this, the turnaround point for the disease is not here yet. But there is something else we can look at also. We can look at previous times that the markets have really crashed for various reasons and see what happened then and compare that with where we are now. So why is that even relevant? Because even though the cause of this crash is novel, human psychology and the financial effects of it, they are not new. So I do believe that we can learn key insights from the few key crashes in history that are similar from that perspective. So let's look at previous crashes in history and see what happened then. And with this amazing tool, we can actually go all the way back to the Great Depression. Let's take a look what happened then. So if you measure this from the peak to the bottom, we get this. It was a decline of almost 90%. It took 149 weeks. I've selected the weekly candle here, so 149 bars means 149 weeks. From the top to the bottom. So let's note that here in our tracking sheet. Now let's notice something else. There is a bottoming pattern here. This pattern is called Adam and Eve. It means that there is a sharp V-shaped decline and then a more rounded bottom up to the same neckline, which doesn't go as deep. So it was actually possible at this time, using classical charting, to identify the bottoming pattern. And much of that literature was actually published here during this period. Let's now do something else. Let's see if we can use the Larsson Academy trend indicator to notice that the trend turned around and go back in. In preparation for this video, I've tested different time frames, and the 2-day candle proved optimal. We get then no false entry. So that one flipped gold here in April 1933, around 75, even before the classical charting pattern confirmed somewhere here at maybe 83, 84 in May. So let's note that also. Now let's continue to the Black Monday in 1987. Even if you weren't around then, maybe you've seen The Wolf of Wall Street, so you know the scene from there. If we do the same thing at that point, we see here that we had a drop of 41% that lasted 8 weeks. So let's note that, and let's see if we can identify a bottom pattern. Sure enough, there is an ascending triangle here. If we flip to 2 days candles, and as you can see here, it broke out of this ascending triangle even though it retested it one more time in July 1988, at the same time as the Larsson Academy indicator flipped gold. And the number of days from the bottom until we repurchased here was 270. Alright, onwards to the next one. .com crash of 2000. We had then a decline of 39% that lasted 143 weeks from the peak to the bottom. So we note that. Let's see again. Sure enough, there is a bottoming pattern here. This is an inverse head and shoulder. Here is the head. Here are the two shoulders and the neckline. That broke out then in July, maybe 9200. And the Larsson Academy indicator on the weekly time frame flipped gold shortly after in October at 9600. So the time we could repurchase from the actual bottom until we had a clear indication of a bottom was 284 days. Okay, let's continue to the 2007-2008 mortgage financial crisis. And if we do the same exercise here, we see that we had a drop of 54% that lasted 73 weeks. And sure enough, once again, we have an inverse head and shoulders here. Here's the head, here are the two shoulders and the breakout around here. Let's look at the 2-day candles. The trend indicator was consistently down, then turned up here around this time. But I'm actually going to switch here to daily candles and show you something else. We do get one false entry here, but it's minimal and it quickly turned down again. Otherwise, it was actually consistently down all the way until it actually turned. With that indicator, we caught the bottom here even earlier than the inverse head and shoulder confirmed over here. So that was optimal at the most recent financial crisis. And we could then re-enter only 64 days after the actual bottom. So where are we now in the COVID-19 crisis? So the answer is that if we measure from the top to the latest bottom, we're down 38.5% over 6 weeks. Before we start the analysis, I want to show you something else. If we go back to the weekly candles and we start here from the beginning again, you can see here the Great Depression. Here we had the .com crash. Here we had the mortgage financial crisis. Here we have the current issue with the COVID. But one of these really stand out, and that is the Black Monday. it doesn't look like the other ones. It looks more like it's just a correction. If you look at the total parabola here, you can barely see it. So in retro perspective, this was more of a simple correction, in my opinion. So I'm actually going to remove that from the analysis. Now looking at these ones, I will do a scenario. It's not a prediction, I cannot predict the future, but sometimes it's useful to look at the history and see what could a scenario be for this in case something similar would play out. And if we just take some sort of factor average of the previous 3 crises, we get something like 50-60% decline. If we look at the duration that took, there is something important to note, and that is that the world accelerates. Change happens faster and faster as time goes on, with the globalization that has happened the past decades. If we compare the dot-com crash with the mortgage financial crisis, the peak to bottom was 50% less than the dot-com crash. And if we assume that something similar will happen now from a financial perspective, that the financial crisis as a result of this will last half as long as the previous one, we get 37 weeks. Another reasonable assumption to make is that since there was a clear bottom chart pattern on all the previous crises, it is reasonable to assume that there will be an identifiable bottom chart pattern before this is over. So that is the scenario that I will expect. Time frame for the Larsson Academy indicator between 1 week, 1 to 2 days actually proved optimal for identifying when the trend turns. Again, the world is moving faster and faster, so from an economical perspective, maybe an even shorter time frame today will turn out to be optimal. So I wrote here between 12 hours and 1 day. So 12-hour candles or 1-day candles could be optimal this time. And the previous times, from the actual bottom until this measured identified the bottom and gave us an entry opportunity, that actually reduced by 75% from the dot-com crash to the mortgage financial crisis. If the same thing happens now, it would be 16 days. So that would mean that 16 days after, in retro perspective, what actually was the bottom, we should be able to get an entry signal, and we miss, in quotation mark, only 16 days. If something similar plays out, we get something like this: 37 weeks and a 50-60% decline. We then end up somewhere here. In October. And between these lines. Coincidentally, that also pretty much aligns with these support lines here. This one from that bottom, this one from the top in 2007, this one from the top in year 2000. So if this scenario plays out, where we are now is not the bottom. Now this was all on Dow Jones. As you know, I try to stick to what I know, which is technology and technology assets, and they are generally traded on Nasdaq. I still analyze this to show you the Great Depression, because that Nasdaq didn't exist at the time. So if we do the same exercise on the Nasdaq index, this is what we get. The dot-com crash led to a decline of 78.5% over 135 weeks from the peak to the bottom. Once again, we had a clear identifiable bottom chart pattern, Adam and Eve. And once again, if we go to the 2-day candles, we can see that the Larsson Academy indicator once again proved optimal and gave us a true trend change even a little bit before the chart pattern confirmed. Fast forward to the mortgage financial crisis. That decline was 56% on Nasdaq over 71 weeks. The bottom chart pattern here is not as clear. Some assets I know formed a double bottom here, which is almost reflected in the index chart. But the Larsson Academy indicator very clearly and once again proved a true trigger for the trend turn, around here maybe at 1800 level. So let's look at where we are now with the COVID-19. The decline from the peak to the bottom printed so far has been 33% over 5 weeks. If we do a similar analysis now and paint a scenario, decline here, if taking a factor average of these ones, we get to 67%. Maybe it could be less, maybe it could be more, but somewhere in that range. And same thing here, the duration from the peak to the bottom became shorter in the previous time, so maybe it will be similarly shorter this time. Let's paint 37 weeks. Again, I expect that there will be an identifiable chart pattern. Since world accelerates, maybe the optimal time frame this time will be shorter than last time. Let's see how that would look. It could get in this range, maybe between these support levels, which coincide with a peak from before the 2008 financial crisis, or the peak from before the dot-com crash, or this trend line here formed through these points here. If we now go back to the log chart, which I actually prefer, we can see that should this scenario play out, this is not the bottom yet. We can also notice that, unlike when I made the previous video, the bottom of this 10-year channel has now broken. And often when it does, the price at least reaches a point which is the same height as the channel, which would be somewhere here. And it has come nowhere near that yet. Even after the disease recovery and the feeling of euphoria that will come then, there can come a big hangover in terms of financial effects, even with the stimulus packages from the governments. So the targets here are just guesses and speculation, but the fact and the conclusion from this investigation is that so far it has always been possible to identify the bottom relatively soon after it has happened. And it has been possible both with the Larsson Academy trend indicator with the right time frame, or the Larsson line as people still call it. So make sure you get access to it along with my course on larsonacademy.com. And it has also been possible in most cases with classical chart pattern analysis. I will tell you when I see this pattern develop. Also, if you haven't already, do take this time to educate yourself with the Larsson Academy course and get access to the indicator. There will never be a better time to do so. So that is what I will do personally. I will slow down, monitor this, try to identify a bottoming pattern. Having said that, I have made a few select exceptions where I went in already. I'm discussing those with the people in my network, so do take the course, get the indicator, and you can join that discussion. Do not miss it. Make sure you subscribe, switch on the bell, and sign up for email notifications on www.larsonacademy.com/updates. It is free. Thank you. Stay safe. Protect not only yourself but also others. Larsson out. Hej då!